Hi, it's Alli Jordan. Welcome to Secrets to Scale, our look at strategies that can help independent RIAs drive growth. My guest today is Jay Hummel, partner and co-founder of Wealth Advisor Growth Network. WAGN is dedicated to helping independent advisors accelerate growth and realize their potential. Welcome, Jay. Great to have you join me.
Alli, thank you for having me. It's great to see you.
Yes, you too. So we look back on 2020. It was WAGN's first year, a great first year, great time to have a first year in the middle, living in the middle of a pandemic, which we're still in. But one of the silver linings was you guys had your first team. You put together a great set of partners. We had a great team that you were working on. Everyone was excited. And about a week before their break date, the entire country shuts down. You guys make the decision, you have everything planned, you're ready to go. So you and the team decide, you know what, we're going to do this. And honestly, it was one of the more successful transitions that I've been a part of, which really speaks volumes to what you and John have put together.
Well, thank you.
So as we
nice
look, as you guys kind of, you evaluate, you're now in your going into your second year of business. What was one of the biggest takeaways from your first year as a new business?
Well, yeah, no, thank you for the kind words. When we launched our first firm, we launched it March 20th, which, those who study the markets, March 23rd, that Monday turned out to be the bottom of the equity market. So not convinced you could have picked the worst time to start a firm, but it actually turned out to be the best. We learned that we were able to find clients easier because they weren't traveling. Everybody was on lockdown. But I think more that lesson to me was, I've spent my career in a lot of ways almost like an entrepreneur instead of an entrepreneur, which means, I did a lot, was lucky to be on teams that did a lot of creative things within big companies. And this is my first true time of actually building an independent firm on our own as entrepreneurs, as you and Trey have done at LibertyFi. And I'm not sure we would have been able to do that deal within a larger company construct, because I think people would have thought it was too risky. People would have said, "Oh, I don't know." And so I think our lesson of year one is I truly have never, I've kind of had blinders on. I've always believed small to medium sized companies are kind of what run the economy. And John and I are having a blast with you and Trey and the rest of the team because we don't have the bureaucracy holding us back from the things that we know we can do that are in the best interest of the advisor and the best interest of their clients. And we've gotten to do things that I think if we were sitting in a big company, nobody would have let us do.
Right. It's kind of like we don't have handcuffs anymore. We can do what we know is best, which I know is something
you
that
kind of you don't think about it. You were in a big company. I was in a big company. You're surrounded by people that care as much about being busy as they care about results. And my joke, I was speaking to somebody earlier today. I said, maybe there was a day where we all go run big things again, big teams and bigger companies. But I almost think I'd get rid of a third of the people when I went in because I think I just think the smaller, I've learned so much running a smaller company about how to get things done, how to be efficient, and how bureaucratic much of the US system is set up to be.
Yeah, a small, nimble team where people wear lots of hats, want to get something done. I mean, it's incredible what we can get done when we want to. So, okay, so today we work with 25 RIAs who are all doing a great job growing their business. They've invested in technology. A lot of them are growth minded. So I know one of the things you and John do whenever you go into a firm, you kind of evaluate their tech stack, how they're doing things, what financial planning tools they're using. So what's the one thing whenever you're thinking about a firm, what do you suggest that they evaluate as they're really looking to take to the next level to kind of get on that trajectory for growth, inorganically and organically?
Yeah, so one of our premises, as you know, is inorganic growth comes better, right? You can go out and buy a firm, you can go out and do a tuck-in, you can go out and do a transaction much easier when you're actually growing your firm organically, right? Because people want to be a part of a platform that's growing, whether that's someone to go out and do a transaction, whether that's, I still believe we have a talent shortage in the wealth management space. When you look at talent under the age of 40, there's a major shortage. And so top talent under the age of 40, who is the future of your firm, only wants to join firms that are growing. And I think it sounds so simple, but I think so many firms don't understand where they're spending their time, right? And so I was on a call yesterday with a firm, unbelievably successful on paper, but doing a lot of things manually, spending a lot of time in things manually, growing at 15 to 18% a year, which is a growth rate that all of us would
Right.
love to have. But every time they grow, they would just throw more bodies at it. And I think the conversation we had, which is, let's step back for a second. It's easy to go throw another body at something, but at the end of the day, focus, in my opinion, matters. And so every person you add, they have to be managed, right? You have to think about, and so, it's a distraction from growing your firm as you continue to add people in the mid to back office, or you add people in investment management and trading. And I just would say most firms have no idea where their people, whether they're small, their own time, or whether they're big, they have no idea where their people are spending their time. And I think I've always said it, and people roll their eyes at me. I do it about twice a year. I color code my calendar. Blue is internal stuff, red's client stuff, green is going out and building new relationships. And you look after a month, telling you, when you do that, you look at where you spend your time, you think you're spending 70% of your time growing your firm. And I bet it's exactly the opposite. And so I would stress small to big firms, figure out where your people are spending time. Because I would bet every viewer of this that they're not spending it growing their firm the way they think they are.
Yeah, you're spot on. I know that's a conversation you and I have a lot, and where the technology can really come in to provide that lift for them to focus on growing their firm, the client relationships, those additional advisors that they want to bring on, and allow the technology to really take that operational lift for them.
That's right.
It kind of brings me to my next point that we talk about a lot is advisor yield, right? It's kind of a term, I think you might have coined it, but it's a, how do we get advisors to really increase their advisor yield? There's only so much time in a day. They can only manage so many clients, so many relationships like you were talking about. What's a way that they can really, you see firms or just individual advisors being able to increase that advisor yield?
Yeah, so no, yeah, we did trademark it. People think it's nuts, but I look at advisor yield in two ways, and they come together, which is why it's important. What's best for the client, what's best for the advisor. To us, we coined the term 2 years ago, advisor yield, which is the clients today want more one-stop shopping, right? They want more yield. They want their advisor to do more for them, right? It's the Amazon of the world, where I want to go to one place and I want to have a digital experience, and I want you to be able to do more for me. And on the advisor side, the RA wealth management side, there's still too many firms that are only about AUM revenue, right? And we've been a part of it. A lot of advisors saying they're moving financial planning to the center of their value proposition. Many say they're doing it, most aren't, right, in the true sense. And so our belief is, if you take a client who wants you to do more for them, and you build a platform where you can do more for them, you can actually grow your firm 30 to 40% from a revenue standpoint without ever bringing in another client, and also driving more satisfaction for your end investor, your client. So that's why we're huge believers in. I know it's especially in the RIA independent space. Insurance is a bad term, right? Because many people are thinking in annuities and they're thinking of the transactions. There's so many best interest platforms out there today, on the life insurance side, on the property casualty insurance side. We believe advisors should play in the insurance game. It doesn't necessarily mean they need to be experts, but they better be able to go access these platforms to be experts. When I think of planning and driving yield, also is on, when you're doing a plan, so many advisors are ignoring the liability side of a client's balance sheet, right? The mortgage of their house, the debt that they, securities back lending possibilities, to be able to, on a corporate exec, instead of exercising a stock option, how about you take a security back loan instead of, and pay 4%, instead of wasting a 12% asset by exercising that stock option. So our belief on advisor yield is the client will yield more if the advisor can do more for them. And that advisor on that side, by being able to do lending and cash management and insurance, are going to drive a lot more revenue per customer, and grow their firm without ever having to add new relationships.
I just want to underline what you said. If an advisor focuses on the full financial plan of their clients, bringing in that insurance, that credit, 30 to 40% in additional revenue. If the listeners don't take note to that, then they're really missing out on something. So I appreciate you going into the detail there.
Well, and not to belabor it, but I think it opens, if you do that, I think one of them, which anyone who's watched kind of me on a podcast, I'm a huge believer in the business owner, right? Much like we started this podcast, which is, small to medium sized businesses will continue to be the lifeblood of this economy. They will continue to have to transition over the next 10 years to second generation leadership, whether that's family members to go run these small to medium sized businesses or to ultimately sell and move on to a bigger strategic player. But the independent firms aren't serving these business owners, and they aren't serving them because they're looking at only assets under management. And these business owners have so much of their money tied up in their business, they aren't a quote unquote attractive client to an advisor that's only focused on assets under management. And so by adding lending and insurance and planning opens up an entire new market to those advisors, so that they don't wait until that business is sold. And then that business owner gets 26 phone calls from wealth managers because they're in the business courier for selling their business for 30 million. And that business owner is like, where have you been for the last 20 years? And like, okay, you care about me now because I have money that you can invest, but where have you been for the last 20 years? And so I'm a huge believer in the independent firms can take on JP Morgan's Private Client Group and the others who are serving the biggest organizations in the US and leaving the middle and small businesses behind. And I'm just passionate that the independent advisor can figure that out and serve that marketplace that's been ignored for too long.
Yeah, and that's the reason why I'm wanting to have these conversations with people like you and our other partners out there, is to make sure our firms that we're working with really understand what they do have access to as an independent RA. Sometimes I worry that they don't feel they have the resources there to do what you just explained, but each of them do, especially those in our network. So thanks again for going into the detail there. So our last question that we're asking all of our guests, just what is your number one tip for advisors really to achieve scale in 2021?
I think it's realizing, I think what happened, and this isn't earth shattering, a bunch of people around talking about this, but I think what happened last year with the pandemic brought 5 years worth of trends to the forefront. I feel like it happened with DOL 2 years ago. It accelerated on the asset management side for distributors, 5 years worth of pain and change. It accelerated it to year one. And I think the last year that we've dealt with in the independent space and with the pandemic has pulled that forward. And so I think it's all about digital experience. It's all about thinking about how you engage investors in a very different way. I think it's opened up avenues to communicate with advisors. We're friends with James Liu as an example of Clearnomics, right? Unbelievable company on how to help advisors scalably talk to their clients about the markets, right? Like 2 years ago, I'm not sure anybody would have paid attention to Clearnomics. They should today, because I think of how the consumer is used to. So I think the consumer who was going to go digital probably 5 years from now is now digital today.
Right.
And I think through the lens of the way I would think about it, we're doing it in our firms, is how are we engaging clients differently as a result of the pandemic? Because I don't think everyone gets a vaccine. I don't think we're going back to the old world, right? And I think we have to think about how we run our firms more effectively, given that we're not going back to the way it used to be done. And how do we think about it? So one of the things we're working on is, from a client experience standpoint, is how do you encourage people to want to come to the office, right? Like, I still believe our clients are going to want to ultimately come to the office, but we're going to have to encourage them to do so. We can't have them come just to sit there and see a report, right? A performance report. You guys can send that to them on their client portal. But we're thinking about things like partnering with the car dealerships down the street. So when they come, their car gets taken away and gets washed, right, by the Mercedes dealership down the street. And suddenly they come back, their car's washed. They may drive a Lexus today. The Mercedes dealership loves it because they get a high net worth lead into it. And now they can't believe they came to our office and their car got washed. So I just think we're going to have to think differently about how we engage clients and encourage them to want to meet us in person and make it valuable to do so.
Well, this was all fantastic. I really appreciate you coming on today. I know our advisors and others that are listening are really going to benefit from everything that we talked about. And I highly recommend each of our listeners out there to check out Jay's podcast, The Deep Dive, where Jay interviews industry leaders on different topics. Thanks everyone for tuning in, and we look forward to having you on the next Secrets to Scale.